I'm on Facebook. Thank you. All right. We're live on Facebook for the 2018 Rock Properties Investor Conference Call, our third annual, 24th year in business. Is the conference call on? Hello? People on the conference call? Oh, good. Who do we have? Who's that? Oh, Phil, how you doing? All right. Carl, all right. Got my email, Carl? Let's see. I guess I did. Oh, busy time. Well, thanks for getting on the conference call. Appreciate it. Well, you know, I'm going to be in your neighborhood, so I thought of you. What the? Oh. I'll make a note. I'll reach out to you. We'll make an official time. Howard, how you doing? Welcome from, how's Boca? Oh, man. Good life. Awesome. Yes. 54. Yeah. 20 years, yeah. maybe I'll come down January, February every year. How about that? Yeah. Great rhythm. Oh, well, it's a conference call. Other people are signing in. That's all. Keep going. Yeah. The income does juice the return, especially. I'll talk about that. I'm glad you brought that up. Let's jump right in. That's a good point. Welcome everybody. It's our third annual Rock. Okay, it's our third annual Rock Properties Investor Conference Call. We have a number of people in. We're live on Facebook, and it's our 23rd year in business. So we'll spend about a half hour. First part, I'll talk about a few topics that have affected us and impacted us over the last year. And then we'll open it up to questions. I always like to take my medicine first and then have dessert later. So we'll start with anything the less than bright spots. In the last letter, I mentioned that we had offer and acceptance on a package right outside our front door here in Newark for 7 effectively mom and pop buildings, the ground floor retail with 2 or 4 apartments above. All spread out in our neighborhood within a mile radius. It was small, but because it was right outside our front door and I know the area and I love the area, I think it's got a lot of upside. We made a deal. It took us a while to come to a price, but he came down. We came up a little bit. The seller has backed out. He's taking it off the market. He's talking about doing a JV because a couple of the sites have potential down the road for development. So unfortunately, that is off the table. We're keeping our offer where it was, and if he wants to come back to us, we'll be available. I'll talk about our struggles with growth acquisition in a minute, but while I'm on Newark, I'll talk about the rent control Newark. I'll just mention we have a number of properties here. We had worked hard with the city council to put in a mechanism, I talked about this last year on the call, to put in a mechanism to allow for increases on vacant apartments, on turnover, not against limiting rent increases on occupied tenants, but an average tenancy is under 7 years. So it's fair that when somebody moves out, we get to renovate and recapture that investment in increased rents. The city put in a mechanism to allow that to happen. We thought it was a good compromise with the tenant association, who was really lobbying against it, but the city saw the benefits and the continuing investment into their housing stock here in Newark. And the tenants really outflanked the landlords, and they outflanked the city government by using a mechanism last summer to put a ballot referendum up. How does he do that in the state of New Jersey? You have to get 10% of the signatures from the last election in which an assembly person was on the ballot. In Newark, that meant they had to get about 1,100 signatures. A city of 280,000, that's kind of remarkable. They got 1,100 signatures to put a ballot referendum, to put a referendum on the ballot, basically eliminating just about all rent increases, making it very difficult anyway, and adding hurdles to get rent increases on vacant apartments. We fought it. The city council, rather than watch it go to the ballot and let it pass by the voters of the city of Newark, the city council got sort of very fearful of that kind of mechanism, and they jumped in and took control of themselves and passed it verbatim. And we didn't think at that point that was actually a bad idea. So it did pass. So there's more hurdles now for us to increase rent on vacant apartments. We still are bullish about the long-term prospects of our apartments. Certainly other buyers are. Breathtaking acquisitions going on in Newark, or records being broken right near us in North Newark, a housing community, 450 units, apartments, beautiful grounds, apartments not nearly as nice as ours, went for $110,000 a unit. Recently, we were buying stuff at $50,000 a unit. So in Newark, so hasn't dampened investor enthusiasm for investing in Newark. And let's talk about acquisitions and growing. We don't have much to report over the last year. Howard was talking about a house we bought, which worked out beautifully, and we've bought a number of them. As multifamily never really hiccuped over the last 23 years in values, we haven't seen a dip really in values of multifamily. Housing prices got slammed in New Jersey after 08, 09, and have been coming back slowly. And we bought 6 of them, always adjoining our properties, usually to get extra parking and to recapture a driveway we were sharing. We bought one in Montclair. We bought it for about $550,000, 2 apartments, and we refinanced Montclair, the original mortgage we had on the rest of our buildings, and we included this one in the package, a blanket mortgage, and so we got about another almost $40,000 a year in income. We put a new mortgage on the property, and the way things are going, we got a lower interest rate compared to what we got in 2011. So as I reported, the monthly payments on the mortgage for the blanket over all 50, we had 48, now we have 50 units in Montclair, the blanket, the monthly payments went down about $2,000 a month. They're almost more than $25,000 a year actually. The monthly payments went down on our mortgage, but we also got the extra $30,000 a year on the house. So the mortgage balance went up a couple $100,000, but we have the extra income from the house. And not only that, the income on the whole property in Montclair, when we took the first mortgage at $2.5 million, and the monthly payments were just over $14,000, the annual income at those properties was $740,000. Now, with lower mortgage payments, the annual income is over $1 million. So it just goes to show how we're always, investing in our buildings. That leads to increased rents, and while we're also paying down the mortgage. The way we were able to keep that mortgage balance sort of stable is because we amortize every year, and some of these properties amortize $70,000, $100,000, $140,000 a year. We're paying down our mortgages every year. I know, like for example, Phil and I had a conversation. Phil Oppenheimer's on the call. He and I had a conversation about leverage, and we definitely try and keep our leverage low. So we haven't had nothing to acquire. The company itself is growing. We're taking on third-party management that keeps us busy. It tests our systems. It's almost like a stress test. We'll take in 200 units from an owner and have to digest it, and a lot of times his systems are a mess, and we have to fix things. And that's good for our company. It keeps us growing. It's not good for our equity position is what we have and our growth, and for our investors. And why is that? Why aren't we buying? Well, it's, as I said, prices are breathtaking. People are accepting, as we say in real estate, low cap rates, which basically means low cash on cash returns, pushing, from what I see, zero. People are buying properties for near zero returns, and everybody is comfortable buying in cities. When we started Rock Properties in 1993, there were crack epidemics going on in a lot of these neighborhoods. No one knew which way the cities were going to go. Were they continuing to go down the toilet? I don't think anybody really foresaw, based on the prices we were paying back then, that cities would become fashionable again, and they are fashionable. Millennials, baby boomers, for them, the American dream is living in a nice apartment downtown. That was never true. It does vary, but right now, home ownership is at one of the lowest rates in decades. So apartments and cities are fashionable. And there's not a bad neighborhood in the city anymore. I was talking to a woman recently. She grew up on 83rd Street on the Upper West Side of Manhattan in the 70s and the 80s. She was a kid there. And I said, remember, back then, you wouldn't walk Amsterdam Avenue in the hundreds. You just wouldn't go up there. It was dangerous. She goes, are you kidding me? My parents said never walk down West 85th Street. That was too dangerous. So now you can walk around, pick a neighborhood. I don't care where. It's not bad. There's not a bad block. There's not a block, not a corner where you say, oh, I can't walk by that candy store. It just doesn't have. I used to wear bulletproof vests when I started this business in Brooklyn in the 90s. Not anymore. Cities are fashionable. They're family friendly, and everybody wants to invest here, and they're doing it for ridiculously low returns. We're not chasing those returns. As I learned from Phil Oppenheimer, when in doubt, quote Warren Buffett, right? So here's what Warren says. The markets are generally rational. They occasionally do crazy things. Seizing the opportunities then offered does not require great intelligence, a degree in economics, which, by the way, I have, and I never really thought it was that practical anyway, but does not require a degree in economics or familiarity with Wall Street jargon. What investors then need instead is an ability to both disregard mob fears or enthusiasms and to focus on a few fundamentals. A willingness to look unimaginative for a sustained period or even to look foolish is also essential. So yeah, I feel unimaginative, I feel foolish. I look at properties, but I even try not to, because I see things I love and I want to buy and I might start to chase. They're out there. So we're really trying to restrain ourselves and just hoping that we're going to, sit tight and not be encumbered by anything that's going to impede our ability to double the size of our business when there's opportunity again out there, which has to come because real estate is cyclical. How about selling our properties? Prices are so high. I've had a couple of people, usually younger investors, say, hey, let's cash out. I never met a real estate owner poolside in Florida, an older guy who said, oh, I'm so glad I sold 20 years ago. I'm so glad I sold 15 years ago. Anybody who held seems to be happy to me. And anybody who sold thought they were doing so great since I've been in business doesn't think it was the most wonderful thing they ever did. So we have sold. We sold 3 properties in our time, smaller properties where we thought we captured all the upside we could because of the layouts of the apartments or the work we did or the neighborhoods. But in general, I look at the properties we have now, I don't see any downside coming in the future to these properties. They all look like, and I really believe all our properties have additional ways to make money. We can reconfigure them and people are going to move out. We can fix up apartments. All the money we spend is getting well north of well into double-digit returns for us, cash on cash, any money we invest in our property. And I still see a lot of opportunity to increase returns going forward and maintain increased returns. And we're getting attractive returns currently. Most of the properties have no money in. Everything now is earning 7%, at least on a cash-on-cash basis, plus we're amortizing the mortgage. And most of the 7%, it's fictitious 7%. It's really infinite because there's no money in the deal. Most of them are in the teens and beyond for returns. So not say when I had a call with a broker yesterday. Said, Andy, the property sold for $110,000 up the street from you. Let's talk. And I pencil it out and we see. But so far, once we pay the capital gains and look at the money that's left and what are we going to do with it? It's sitting on cash right now. I'd rather have this cash flow and keep increasing it going forward. And we're going to do that no matter what happens in the outside economy. We're going to keep pushing our cash flow forward. So those are the themes. I'll take questions from anybody. Last time we had some good ones, and yeah, I'd like to hear from you guys. Howard mentioned that house. Anybody want to jump in? Please don't be shy. Yeah, nothing. Well, I mean, Newark's bad, but it's not the rent control. We can work with it. Rent control is not that much different than Elizabeth. Really, which are pretty oppressive. Jersey City is no picnic. And Hoboken is horrible. But we can work with it. It's just not as easy and takes some sophistication, but we can work with it. We'll still see our rents going up. I don't know what they're thinking. If it's money laundering, I talked to a guy just bought a massive project. He said, "Oh, we're looking at a 10 or 15-year horizon," which means he's not doesn't think he's going to be making any money. I said, "Do you have investors?" Family money? He said, "Yeah, I have some investors." I don't know. Interest. Listen, I think what happens when non-risk investments, like T-bills are down in the 2% range. People maybe are willing to chase T-bills down that far. We're trying to hold our line at 7-8% after 2-3 years. I'm not trying to sell people, let's go down to no return, because in 3-4 years we can get back up there. It happened in Newark recently, but we now are back at 7%. We did take us a couple of years to get on our feet in those buildings, but we're back up to 7%. That's going to stay solid. I don't know. I don't know what maybe they're doing relative returns. They're, they keep lockstep with T-bills or something. I don't know. Yeah, it's 10% with some investment. Yeah, it's tough to get. I'm not saying it's easy. You have to leave the apartment vacant, and you have to while you file the paperwork with the city, but you can get it. Bob, oh good. Hey Bob, good to have you. To get those increases, it could take. It's running from the time the person moves out to get the permission. The work is done 3-4 months. The apartment has to sit empty a couple extra months. The cost. Yes. Yeah. We've learned to work with them. Yeah. It's good. Any other questions? Meanwhile, I think the mayor's doing great in Newark. He did try, and he got us that first 20% increase that the referendum on the ballot reversed, but he did get that for us. Got to thank him for that. Who's up next? Howard. Oh, good, Howard. Well, we're in Pennsylvania, and the prices there are expensive to me too. I mean, we do look between here and Pennsylvania. I know somebody who built an apartment building in Chattanooga and was raving about that town. They sold right out, and I looked down there, but it takes a while to learn a market. But what do you say? Yeah, the prices don't seem fair to me. You don't want to buy a fair building at a wonderful price. You want to buy a wonderful building at a fair price. They don't seem fair to me. Yeah. Yeah. We looked at a couple things. One, we looked at building. Our leasing office takes a full 3-bedroom unit. That's lost income. And because, well, right now we have very low vacancy, we have nothing to show people. She has 3 people set to move out, and well, she has deposits on all of them. So we have a nice, clean, pristine 3-bedroom unit that's furnished. I even slept there one night when I took my kids to Hershey. and they looked around the complex and said, why don't we live here? Kids are riding their bikes. There's pathways everywhere between the buildings. To a kid, it'll look great. So, so we did look at building a model kind of clubhouse unit off to the side, and there is land for that. The price made it prohibitive. I mean, construction is not cheap. We also looked at storage units. And even those, to put up a storage unit with electrical is not cheap based on the rents we could get. I mean, we could do much better continuing fixing up the units, and I think probably wrapping or either repainting or residing the complex. We're working with an architect with the color schemes. I think that's probably better money spent than doing some new construction for the prices we could get there. It works. It really works well when we get the parking from the backyard, but if we don't need the parking, it's not as attractive to me. I mean, we could keep buying houses, but they're not cheap. I mean, we paid $540,000 for 2 units. I mean, that's nothing cheap about that to me. And the house next door went up to auction, and I sort of passed on it. We could have had 3 in a row, and in the future, that's a spectacular development site, but did not end up bidding on it. Again, no parking, and sort of a different, yeah, I mean, it's not like we don't think about should we be in other food groups or different asset classes or try different things. I mean, we did do a tax credit deal in Newark, and, that's sort of the next step with development. We were involved in a 68-unit building that I'm sitting in right now. I mean, we have 68 apartments here, but I like our model that we've done for 23 years. I don't know how far we want to stray from that, but yeah, and and if there was any of those I thought could hit the returns that we're used to getting, I would jump in on them. I don't see that, but thank you. Good questions. Who's next? Love some more. That's it. We heard from Nelson. We heard from Phil. Yeah. Oh, hi, Barbara. Yeah, great. Taking what? What was that word? Oh. Oh, so set aside. Sure. You mean affordable housing and development? Yeah, I mean, I love mixed income. I love affordable housing. We love mixed use. Not a lot of banks, not a lot of developers always like mixed, but schools next to housing, next to retail that's what we do. I mean, we have lots of our buildings have ground floor retail. We don't have any schools yet, but lots of our buildings have ground floor retail. I made a decision not to be in development. Development is a different animal and different risk factors, but we're more value add. We like to buy existing and reposition it and add value to it. But I can see that working with subsidies. Well, schools have a lot of land. Be a great idea. In some of these markets, in our market, it's tough to find land to build. That's what's great about owning multifamily, or why I don't want to sell. It's a scarce commodity. You can't replace it. I mean, there's no way you could build. Our apartments rent for $800-900 up to $22,000. You can't afford to build without a government subsidy, and there are no subsidies. Basically, you can't afford to build where your rents are going to be less than $2,500 a month. Although this last spending bill, I guess everything increased, but the subsidies for low-income housing tax credits also increased in the last spending bill. But so but it's still a drop in the bucket compared to what the federal government did. There's really no significant affordable housing program in this country. Rent control. That's their answer for affordable housing. Just cap the rents the landlords can charge, because nobody else is in the business right now of doing it. Any other questions? Oh, I made the same mistake I made last year. I'm not repeating the questions for Facebook. I apologize. I'll get better at this. May not even be using Facebook next year the way things are going. But yes, Eve, and I'm sorry, Eve and Marcy, I did not repeat the questions. But it's not too late. If anybody has another question, I'll repeat it for the Facebook. Facebook people can't hear the questions. They can hear me talking. I apologize. Any other questions? All right. Thank you, everybody. Appreciate it. And look forward to staying in touch. Happy Easter. Happy Passover. Did I forget anybody? Is that everything? Okay. Thank you, everybody. Take care. Take care. And Facebookers, I apologize for the questions. Thanks for joining me. And come back next year. I'll get it right. I didn't see those comments, but I appreciate that. You guys should be hearing those questions. I'll work it out so you don't have to, so I don't have to repeat them. You'll hear them along with everybody else. All right. Thank you.